A great way to eliminate your debt faster is to use the cash value in your life insurance policy. But which policy, whole life or universal life, does it better? Well, today I'm going to unravel how using permanent life insurance can help you eliminate your debt faster and help you figure out which policy would do it the best. And so grab your notebook and something to write with because class is in session. And so real quick, if you are new to me or to the channel, my name is Katrice. I am a licensed health and life insurance broker, paralegal, and your wealth architect. And I help women entrepreneurs and professionals to grow, protect, and secure their finances and to build a financial legacy that they can be proud of. All right, so let's jump into it. So first of all, I'm going to break down real quick whole life and universal life, okay? So if you are new to the channel, welcome. And if you are not new, welcome back, okay? So first I'm going to talk about whole life insurance, okay? So whole life, well, before I get into that, the only way to use life insurance for debt elimination is through a permanent policy, which is either whole life or universal life. And universal life can either be just regular universal life or index universal life, okay? So those are the only life insurance policies that you can do this with. You cannot do this with term. So I just wanted to get that out there before I even got started, okay? All right, so now whole life is a permanent policy and it's designed to last your entire lifetime, okay? And it builds guaranteed cash value that you can borrow against, okay? Now the key features of it is stable and predictable, so for your premiums, so you always know exactly what you're paying every month. It does have guaranteed cash value. It does grow slower, but it's steady growth, okay? So it allows you to predict exactly when and how much cash you'll have available. And then some policies also pay dividends, and so this can accelerate your cash value accumulation quicker, providing you with additional resources to help you to pay down debt quicker, okay? So if you're wanting to pay off high interest credit card debt, your whole life policy builds a guaranteed cash value, and so after a few years of you paying into the policy, you can borrow against that cash value at a lower interest rate, which would allow you to quickly pay off and eliminate the debt, which could save you thousands in interest, okay? Because we all know the interest on these credit cards be high, okay? Now, universal life insurance is also permanent, but it gives you a little bit more flexibility. And so the premiums are flexible, so you can adjust your premiums based on your changing income and expenses. So this is great for entrepreneurs, okay? It also has a flexible death benefit, so you can adjust your coverage amounts as your financial needs evolve, okay? And so with universal life and index universal life, it's typically the cash value accumulation is typically tied to investment rates or investment indexes, which is the indexed part of the UL, which potentially allows for you to grow your cash value faster, okay? Now, when it comes to which one is better, here's how you can kind of gauge to see which one would be best for you if you're wanting to use the cash value in your insurance policy to pay down your debt, okay? So when it comes to whole life is predictable guaranteed growth. It's more stable and simpler, and it is ideal for you if you prefer certainty over flexibility, okay? Now, the cons to it is that it's slower accumulation of cash value, and then the premiums are fixed, so you cannot fluctuate with the premiums, okay? Now, for universal life, it does have faster potential cash growth. The premiums and death benefits do have that flexibility. And if your income, it varies significantly. So if you're a new entrepreneur, or your income, you haven't kind of, found your groove yet, then universal life would be great for you. Okay. Now, the growth is less predictable, and it requires active management to optimize the benefits. Okay. And so here's how to decide which one is the right one for your situation. Okay. So if you are somebody who prefers guarantees and simplicity, and you want predictable financial planning, and you're conservative with your money decisions, then whole life would be the way to go for you. Now, if you have variable income and you prefer flexibility, if you are comfortable managing or monitoring your policy regularly, and you want potentially faster cash accumulation to aggressively tackle larger debts, then universal life or index universal life would be the way to go for you. Okay. And it really just depends on how quickly you want your money to grow, and you also have to look at your risk tolerance. Okay. So let's take an example here. Okay. So let's say you're a successful entrepreneur, but your income fluctuates. Okay. And so initially you wanted to look at a whole life policy because you were attracted to the guaranteed stability. But then you talked with your financial advisor. You talked with a insurance agent, and you decided that the universal life would be the way to go because it had that flexibility, within the payments. And so when your business income increased, you could also increase your payments. And so by increasing your payments, your cash value will grow quicker. Okay. And so after a few years, you get the policy, and after a few years your cash value has grown exponentially. And so now you can take that surge in cash value growth, and you're able to eliminate not only your personal debts but some of your business debts as well. Okay, which frees up more of your income to put towards your reserve financial accounts, and also to invest, okay, back into your business, and also to invest to grow your wealth. Okay. And so you have to look at, okay, which one would be best for me and my financial situation. Okay. So regardless of your choice, here is how to maximize debt elimination with either policy. Okay. So the first step is you want to consistently fund your policy, especially in high income years. Okay. And then number two, you want to strategically borrow from your policy's cash value to pay off higher interest debts first. Okay. You want to get rid of the high interest debts, so that way you're saving more money in the long run. This strategy is a long-term game. Okay, this is not something that you purchase the policy today and then in 2 months you're able to start using the cash value. Okay, you do have to keep funding the policy for quite a few years. Okay, I typically advise my clients who are doing this strategy to fund it from anywhere from 3 to 5 years before they start taking any withdrawals from the cash value, just to give it a time to take advantage of the compound interest. Okay, so this is a long-term strategy. Okay, and then next, you want to pay back the loans to your policy to maintain your death benefit and continuously to ensure your long-term growth. Okay, So that is the strategy. Okay, those are some tips to help you to maximize your debt elimination. Okay, and so let me know in the comments, did you know that you could use your cash value in this way? And if you did, put a 1 in the comments, and if you did not, put a 2 in the comments. I'm kind of curious to see who knew that, if this was actually available. Okay, all right, so that's what I have for you in this video. And so if you've made it this far, thank you so much for watching. My goal is to always to provide you with practical, actionable financial advice to help you to take control of your finances and your future. And so if this video provided you with tremendous value, please do give it a like and share it out with your business bestie or your water cooler homegirl who needs to hear this message. Okay, and then subscribe if you want to continue to learn how to grow, protect, and to secure your finances. And also don't forget to check the description for additional tools and resources if you want more guidance outside of the content that I provide on this channel. Okay, now if you would like to book a complimentary consultation with me to discuss how you can use permanent life insurance to eliminate your debt, then you can do so at the link in the description of this video, and there's also a link on the channel homepage. All right, and so remember that the way to secure your financial future is to protect it now, because tomorrow is not promised. All right, have a good one. See you in the next video.